Okay, great. Let's start this Friday's report, the 8th of September. Now, I always like to start with the events, and I think there are some few important news that everybody should look about. And the very first thing is this Bitcoin ETF update. I think this is in the back of a lot of people's mind, especially those that are really looking at this cryptocurrency industry. So I think this news, this ETF news for in the crypto industry is definitely heating up. So what we have here is that the Grayscale Investment has continued to put pressure on the US Securities Commission, aka the SEC, to approve its request to convert its Bitcoin trust into a spot Bitcoin ETF. Okay, and this came after Grayscale court victory, which further strengthened its position. Now, we have already seen this movement whereby the moment we had the Grayscale winning their case against the SEC at the end of last month, we saw price moving up. But then after that, what happened was that the entire Bitcoin movement was reversed, right? So behind this movement and everything, whatnot, Grayscale has continued, relentlessly pursuing this. We have won the case. Now what's going to happen next? They are actually pushing very hard to convert. They want to be the first one, right? And the argument for Grayscale is that the SEC has delayed its decision beyond the permitted duration for SEC decision making. That you have to give us a decision right now. You just cannot say postpone, and you have postponed way beyond the permitted time, right? So what's happening over here is that Grayscale pointed out there is a lack of a valid rationale between which differentiates Bitcoin futures ETF from Spot Bitcoin ETF. And furthermore, any significant differences in safety, which is the main concern that the the SEC has between the spot and the existing futures would have been already out by now, because it's been some time already, the Grayscale running these futures, right? So if there's any problems with it, you really would have seen it. So with all these developments, what is happening here is that the Bloomberg analyst Eric Balchunas estimates that there's a 75% chance, okay, a 75% chance of a spot Bitcoin ETF gaining approval before the end of this year. Now, this is it's a high probability right there. And this is the capture from the Twitter, Twitter capture of Eric right here, and he mentioning that 75% chance of the Bitcoin ETF happening, okay, by the end of this year. So basically, it's about the analysts, they believe in that the change is imminent, it's going to happen, and that a Bitcoin ETF approval is a question of when and not if. Okay, so definitely for the next few months, this news will be there and ongoing, and various news portals have came out saying that if an ETF is approved, probably we might see the Bitcoin actually going to about in the 40,000 mark before the the halving. Now, if it's able to do that, that is a very good development for there. Okay, and is also supporting all the structures that we have discussed so far in the Bitcoin, if you have been following the past reports about that. So let's see, let's cross fingers for those who have invested in this or is trading Bitcoin. Yeah, right. The next topic I want to discuss about is oil price and the Fed's probable reaction, right? we are seeing oil rising to near $90 per barrel, and current prices of 87 is the high of this year already, and I believe that it might push to that round number right there, right, that of 90 at least. So booming oil prices in 2022 fueled the US inflation to 40-year high, and we saw prices coming down early 2023. Oil price actually came down early 2023, and what happened next is that after coming down, and then it started ticking up again after decisions made by the OPEC Plus to cut productions. We have saw OPEC Plus doing that, right? A few times they have cut. If I'm not wrong, they have done it twice, if not 3 times already. Cutting, and that has forced the price to go up all over again. So the rise in the oil price definitely will affect the Fed's fight against inflation, okay, like it or not, because it's like I talked about earlier, all this tiny oil affects everything. Even you were to take it away and all, use the core calculations, and it does play a role, even a minor role inside that. If you take away all this, it affects everything. So we also have seen inflation remaining fairly stubborn. So the rise in oil price could probably prompt the Fed to continue raise its rates this year for at least one more time, or at the very least maintain the high interest rates for a longer period than expected. Okay, we have seen the Fed, the people inside those that are involved in the decision making, giving signals that probably this round, the one that is coming at the third quarter of this month, that one, which is the 20th of September, probably that one you won't see. They have already indicated that you won't see it, and also probabilities are also pointing that there won't be any hike. Don't expect any hike this month, but the next one, the November FOMC meeting, remains too close to call, because it's 50-50 right now, and there is a high chance, especially if oil continues to go up and stay right there. This will definitely going to spook the Feds, and they will react. Okay, and with such, if the Fed continues to raise rates, right, I believe it will add more pressure to the US stock market, and force that correction to come. Okay, so that's the end of the fundamentals for today.